Good morning, and welcome to episode 128 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, June 21st, 2023. The war in the Ukraine continues as the Ukrainian forces push forth with an offensive back on the Russian troops. In response, the Russians launched a massive kamikaze drone attack against the western city of Lviv overnight. Nothing there seems to be slowing down anytime soon. Here back home, President Biden's son, Hunter Biden, accepted a plea bargain for criminal tax evasion charges and possession of a firearm while either using or addicted to drugs. The big news in the economy last week was the Federal Open Market Committee meeting and Chairman Powell's decision to leave interest rates unchanged. The news of the pause in interest rate increases initially set the precious metals markets on fire. They started climbing considerably until Jerome Powell gave his hawkish comments in his Q&A afterward, where he said, "We are nowhere near done. Inflation is stickier and will be around longer than anticipated. And as a result, we need to continue the work of raising interest rates at least twice more this year." The markets then fell, and they haven't stopped falling. Let's take a look at the markets, and then we'll talk about what that means and why things are happening the way they are. Gold today, $1935.70 an ounce, down 0.68% from $1,949 last week. Silver down 3.2% to $23.16 versus $23.93 last week. Platinum down 3.1% to $952 an ounce from $982 an ounce last week. And palladium down 4.9% from $13.29 an ounce from $13.97 an ounce last week. As a result of silver falling more dramatically than gold, the gold-silver ratio, or number of ounces of silver it takes to buy 1 ounce of gold, has increased to 83.9 versus 81.78 last week. And the US dollar, you would think, would be stronger as a result of all this movement downward in the metals. It's not. It's down to 102.61 from 103.14 last week. So the bottom line is the markets were expecting that with a pause that we were near the end of the interest rate increase cycle, and the market started celebrating until Jerome Powell said, "No, we are not done yet." And that put a blanket on everything. Now everybody's looking ahead to 2 more interest rate increases and the negative impact that has on the economy. And we are already seeing signs of the economy crumbling or having some cracks in its foundation, if you will. The loan defaults are on the rise significantly. Bank stress, we're well aware of that from the spring. Inflation, as Powell said, is sticky and much more persistent than expected, and we're starting to see increases in the calls for unemployment. So the bottom line is the numbers are telling us that the economy is starting to have an impact of the actions of the Fed, and how much longer they can go, I don't know, but I do think we'll see it through the end of the year, and we're going to see more chinks in the armor of the U.S. economy, I promise you. We're going to cover all this stuff at a couple conferences coming up that I hope you can join us at. Freedom Fest will be in Memphis, Tennessee this year. Michael and I will both be there. That's July 12th to 15th, and Michael and I will also both be down in Boca Raton for Rick Rule's Natural Resource Investment Symposium, July 23rd to 27th, and I do hope you can join us. Please sign up today. If there's any slots, they are waning, I can tell you. As always, we like you to go ahead and like us and subscribe to the YouTube channel. Send us your comments and questions. Follow us on social media. Follow our monthly newsletter information line and our twice weekly alerts, always something interesting. But don't ever forget that getting rich starts with keeping what's yours.